Two ETFs, SCHD and JEPQ, are all you need to start building an income stream that could rival your 9 to 5. Today, we're going to talk about the two strongest ETFs, SCHD and JEPQ. These aren't your average ETFs. They're like the dream team for income and wealth building. SCHD is all about giving you those steady, dependable dividends while also growing your money over time. JEPQ, meanwhile, is designed to pump out high monthly income through something called a covered call strategy. When you put them together, you might just find they create an income stream that could give your regular salary a run for its money. In this video, we're cutting through the fluff. No theories or confusing terms. We'll dive into the numbers, see how they stack up against real-life earnings, and lay out the steps to make this work for you. So, can SCHD and JEPQ really outdo your full-time job? Let's find out. Chapter 1. Overview of SCHD and JEPQ. First, let's go over some general qualities of these ETFs. Think of SCHD as your portfolio's steady workhorse. It homes in on companies that pay dividends reliably, like PepsiCo, Verizon, and Merck. The beauty of SCHD? It's got a super low expense ratio, 0.06%, which means more of your cash is working for you. And get this, it's been offering a dividend yield around 3.5%, while its value has grown by over 175% in the last 10 years. That's a combo of stability and growth you can count on. JEPQ, the JP Morgan Nasdaq Equity Premium Income ETF, on the other hand, is all about income, big monthly income. With a yield around 10%, JEPQ uses a covered call strategy on big names from the Nasdaq 100, like Microsoft, Apple, and Amazon. Sure, it's a bit more up and down than SCHD, but the income potential is huge. Why team them up? They complement each other perfectly. SCHD gives you that bedrock of stability and growth, while JEPQ brings in the cash flow. This duo diversifies your investments and keeps things balanced even when the market's a roller coaster. Now, with the basics covered, let's see how these can work together to create some impressive income. Chapter 2. The Math, Income Potential. Things start to get interesting when we look at the numbers. How much cash could you pull in with SCHD and JEPQ? So, you've got a $500,000 portfolio, evenly split between these two ETFs. That means $250,000 in each. First off, SCHD with its 3.5% yield. Your $250,000 here would give you $8,750 a year, or about $729 a month. Not too shabby, huh? Then there's JEPQ, the income powerhouse. With a 10% yield, your $250,000 would bring in $25,000 a year, or roughly $2,083 monthly. Add those together and you're looking at $33,750 annually, which breaks down to $2,812 per month. And that's just the income, without dipping into your initial investment. To put that into perspective, the median full-time salary in the US before taxes is about $40,000. Post-tax, this portfolio could be close to matching that without you having to lift a finger. But what about taxes? Here's where it gets even better. SCHD's dividends are largely qualified, so they're taxed at a lower rate. JEPQ, although it includes some ordinary income from covered calls, still manages to be tax efficient for many. This is just one setup. A bigger portfolio or reinvesting dividends could really amplify these results over time. Think about what this could mean. Using this income for your daily expenses or reinvesting to grow your wealth even more. Chapter 3. Capital Growth and Long-Term Potential. Don't think of SCHD and JEPQ as just income generators. They've got growth potential too. Let me explain. SCHD has been a long-term winner. Over the last 10 years, it's seen a growth of over 175%. So, while you're pocketing dividends, your investments could also be climbing. SCHD picks companies with solid financials and a track record of increasing dividends. This means your income could grow as well. For instance, SCHD's dividend growth has been averaging over 10% a year. So if trends continue, your income stream could get even more substantial. JEPQ, while primarily an income vehicle, isn't just treading water. It taps into giants from the NASDAQ 100, like Apple and Microsoft. So there's potential for some growth, even if the covered call strategy might limit peak gains a bit. Now here's where it gets exciting. Reinvesting dividends. If you take a chunk of that $33,750 yearly income and plow it back, especially into SCHD, you could really boost your portfolio's growth over time, all while keeping the income flowing. So you're not just making money now, you're laying the groundwork for even better returns down the road. That's the magic of blending income with growth. Chapter 4. Risk Mitigation. As you know, no investment comes without risks. But the beauty of blending SCHD with JEPQ is how they offset each other's weaknesses. Start with SCHD, which is your stability anchor. It zeroes in on companies known for their financial strength, consistent dividend payments, and resilience through market turbulence. These are firms with solid cash flows, manageable debt, and a history of standing firm during economic storms. SCHD is like the steady bedrock of your investments. Then there's JEPQ, which plays in a different league. Being tied to the NASDAQ 100, it's more exposed to tech stocks, which can be all over the place. But JEPQ has a trick up its sleeve with its covered call strategy, which can generate income even if the market isn't moving up, providing a buffer against downturns. Pairing these two gives you a diversified approach that can smooth out the market's ups and downs. SCHD offers that reliable growth and stability, while JEPQ adds substantial income and helps absorb some of the market's volatility. So, even if one ETF stumbles, the other can help keep your financial journey on course. Chapter 5. Realistic Goals. Replace or supplement income. Let's get practical. Can SCHD plus JEPQ really replace your full-time job? Or is it better suited to supplement your income? The answer depends on your goals and starting point. If your goal is to fully replace a $40,000 annual salary, you'd need around $600,000 to $800,000 invested in these ETFs. Why the range? Taxes, lifestyle needs, and your desired safety margin all play a role. At that level, a 50-50 split between SCHD and JEPQ could comfortably generate the equivalent of a full-time income, often with room to reinvest or cover unexpected costs. But what if you're not quite there yet? Even a smaller portfolio, say $250,000, could bring in over $1,400 per month. That's enough to cover some major bills or pad your savings, all while leaving the rest of your salary intact for other goals. And here's the best part. These numbers can grow. Reinvesting even a portion of your dividends could help your portfolio snowball over time. Plus, both ETFs have potential for dividend growth, which means more income for you down the road. Whether you're aiming for full replacement or just a little financial breathing room, SCHD plus JEPQ can work for you. Chapter 6. Practical Implementation. So, how do you actually get started with SCHD plus JEPQ? Let's keep it simple. First, decide how much you can invest. If you're just starting out, even $1,000 can make a difference. The key is to take that first step and then build from there. Next, set up your investments in a tax-advantaged account if possible. For example, a Roth IRA allows your earnings to grow tax-free, which can make a big difference over time. If you've already maxed out your retirement accounts, a taxable brokerage account works too. Automation is your best friend. Set up automatic contributions to these ETFs and reinvest the dividends. This creates a compounding effect, helping your portfolio grow faster without much extra effort on your part. Finally, stay consistent. Market ups and downs are normal, but sticking with a plan will pay off in the long run. Are you ready to start investing? Or do you have questions about how this strategy fits your goals? Let me know in the comments. I'd love to hear your thoughts. And if you found this video helpful, make sure to like, subscribe, and share it with someone who might benefit from this strategy. Financial freedom starts with the right mindset and tools. SCHD and JEPQ might just be the ones you need. Thanks for watching, and I'll see you in the next video.